Hey guys, Casey here. Welcome back to Lions Den Investments and Reviews. In today's episode, I wanted to talk about the markets real quick, give you an update, and let you know where we're headed here, especially with the big crash that we're having right now in the markets overall. Guys, don't fear, okay? Don't panic here. What I'm going to show you is what I expected, okay? And I've been telling you guys in previous videos that I was expecting a retracement or a pullback in the prices from this last run up. That's exactly what's playing out here. So I pretty much nailed that one. Again, I'm just trying to reiterate what I've been saying all along, which is we're not done with this bull run. The bull run is not over. So just relax. Take a step back. Don't look at the charts. If you know you find yourself looking at the charts too much and you're letting your emotions get the best of you, just take a step back, do something else. Don't worry about it, okay? And here's why. Because if we go to the Wall Street cheat sheet, all right, this is the psychology of market cycles. This has been proven, you know, for probably the last 150 years in traditional markets, and now with the blockchain and crypto market as well. And basically, what this does is it measures out the psychology of market cycles, and you can basically use this chart, okay, this Wall Street cheat sheet, and if you know anything about Elliott wave, you can combine the two together, and you'll find that this chart is very similar to what's playing out in Bitcoin right now. So if you look at down here, you've got like hope, right? We get that big run up. Well, let's go over here to Bitcoin real quick, because that's exactly what happened. We got this big run up. Okay, we topped out. And then look what happens. We come down, and then we bounce back up. What happened over here? We came down, we bounced back up. Now if we go over here, look at the chart again. You go from complacency to anxiety, denial, panic, all right? We've already been through that. So if you go back here, we had the big drop down, all right? And that covers all of this movement right in here. And then comes anger, and you got the capitulation, along with depression over here. So we go over here, you have the same exact thing playing out right here on Bitcoin. You got capitulation, anger, depression, and then look, we get the disbelief, right? They call this the suckers rally. Well, what happened here? Same thing, suckers rally. Now if you go back and you look at Elliott waves though, this is where you combine Elliott waves, because in an Elliott wave you get the 1, 2, 3, 4, 5, okay, impulses up, and then you get a correction, an ABC. And I think that's what you're starting to see here is this last leg down, which is going to be leg C. Because if we go back here and look at the Wall Street cheat sheet, you go from disbelief, and then what do you think comes next? It's the same thing over again, a run up, and we repeat the whole well cycle over. Okay, and that's, you know, essentially what I'm looking at here. ABC. Now, if you look at the price ranges that I had in here, okay, I had support right down in here. We have actually hit that support, and I base that off of this resistance here, because we got pushed down. Okay, we came up and we got pushed down right here in resistance. We came back down, so I was setting this resistance level as support. And that's where I came in with this green area right here. Now, here's the thing, guys. We could settle here and then move up and start leg one, but I don't think that's what you're gonna see, because what have I been telling you on this channel for the past, you know, probably year? I've been telling you that they want to shake you out, and this is no different. This is just a shakeout. They want to shake you out because they want what you own, okay? Especially with Bitcoin and tokens that have a limited supply, because you cannot print that out of thin air. So it has tangible value to it, especially if it has some use case behind it. You know, now Bitcoin, use case wise, there's not a whole lot there right now as far as use case for like business, but it's a store of value. It's the most dominant token out there. And why was Bitcoin created in the first place? It's because they were trying to create something that was a decentralized way of moving money back and forth, especially when you've got a freeze in liquidity. okay, like we saw back in 2008. So what I'm trying to say here, guys, is don't worry, okay? We're going to make it through this, and we may come down a little bit below the support. I'm expecting we might even bounce down here off the weekly support line, somewhere around like 36,300. And don't be surprised if you even wick below that, and we come down here to about 34,000. If we do whip below the weekly support here and we hit that 36 or that 34,000 mark, 35,000 ish, somewhere around there, that would be your shakeout. That would be your final leg down. Basically a fake out, creating massive panic, more selling, and I can tell you right now, if anything, I'm just going to be buying up at those prices. So I'm looking for Bitcoin anywhere in between like 35,900 on down here to 34,800. Ethereum, okay, Ethereum's a little bit different, guys. It's not playing out quite like the Bitcoin and the Wall Street cheat sheet, but we came back down inside this triangle, and as you can see here, we had resistance. Back here, we got smashed back down. So I'm using this resistance level, okay, and it's right there along where we were back here on the way up. But this resistance level is right there around like $2,374, $2,400. I could definitely see us coming back down and retesting that, and then we start another leg up. Because I mean, guys, a lot of people are saying right now that this bull run is basically over. You're gonna continue to hear that over the next 2 or 3 weeks. That's what I would expect. But if you know wealth cycles and you know stuff like the Elliott wave, all you do is back up the truck. Okay, back up the truck, because we're not done with this bull run. We are still in an uptrend. Even if Ethereum comes down here to 2,400, look, we are still in a uptrend. Until that changes, I'm still bullish. And don't pay attention to the FUD. That's another thing. Look at this. You got U.S. Homeland Security signs a $1.36 million contract with Coinbase. So if you got that out there this week, they're trying to put on a show for everybody, I think, here, letting them kind of believe that Coinbase and the SEC are fighting each other, but behind closed doors, they're working together. So I think that's just FUD. Here's another one that I caught, which I thought was pretty interesting. The SEC is too short-staffed to regulate crypto properly, and that was coming from Chairman Gary Gensler during his hearing, when he was just completely annihilated by Congress. And if they're too short-staffed to regulate crypto, guess what? They're not going to be able to regulate it properly. You think that's going to stop the market? You think that's going to stop the rest of the world from using this stuff? No. And it shouldn't change anything in your mind either, okay? And then here's the other stuff that's coming out right now, which has got everybody freaking out and panicked about, and that is China. Okay, you got investors grappling with Evergrande fallout, weight risk of wider pain. Basically, it's kind of along the lines of what happened with Lehman Brothers. And this is happening in China, by the way. So they've been assessing the risk on it, and basically what they're saying is that if the Chinese government does not step in to help Evergrande out here and bail them out, this could lead to more global systemic risk, especially with other banks, because Evergrande is a property developer, and so I'm sure they've got all sorts of business deals around the world with other countries and banks inside those countries for real estate development and property. This is where they're seeing the systemic risk, and where that might have an impact on more of the global banks. But like I always said, fear nothing, okay? All it is a distraction. It's there to strike fear into you, because even if we had another 2008 Lehman moment, right? And let's say the whole world starts imploding and you have a liquidity freeze. Well, guess what? That doesn't stop cryptos. That doesn't stop decentralized finance from working, because it's a completely decentralized network that's not attached to the banks. See, they want you believing that there's no solution. in place when there is. And they're trying to control that solution. And you got your boy Gary over here, oh good old Gary Gensler, saying that they're too short-staffed to regulate crypto. All right, so like I said, it's not going to change anything. My view has not changed in this market one bit. If anything, I'm as bullish as ever right now, and I'm gonna be backing up the truck when I can look at Ethereum hitting like 2,400, and Bitcoin possibly coming down a little bit lower here. Because I think they're gonna shake us out and bring us lower. That's just my own personal opinion. If you agree with that, hit the like button, because it's not a bearish perspective here, even though it may seem that way. Just hold on for dear life, okay? If you've got bags right now that you were planning on selling, if you can stake it, I always say stake it to make it, because you can get that passive income coming in and get rewarded in these tokens at these lower prices. So you're kind of dollar cost averaging in, so to speak. And then when we make this first leg up on the Elliott wave 1, 2, 3, 4, you're going to be in a much better position to make profits, okay? That's all I've got for tonight's video. I hope you guys have a good one. Stay tuned, because I'll shoot another video here soon, and we'll see where these markets go. But like I always say, they're volatile. They go up and down, and as long as you can understand where we are in wealth cycles, you have nothing to fear. If anything, just be a lion, take this market and rip the jugular vein off of it, okay? With that said, you guys have a good one, and I will talk to you later.